Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind those official corporate filings before they even hit the newsstands. So buckle up because today we're looking at a company that is making some interesting moves, and we're going to find out exactly what's going on behind the scenes. Before we dive in, if you are new here, make sure you hit that subscribe button and the notification bell so you don't miss out on any of our deep dives. And for those of you who love to discuss these filings and get ahead of the curve, our Discord community link is in the description below. We'd love to have you join the conversation. Alright, let's get straight to it. AgEagle Aerial Systems Incorporated is a company in the drone business, and they've just filed a report that tells us about some significant changes to a deal they had in the works. It's not a massive financial report with all the nitty-gritty numbers, but it's all about a crucial update to a financing agreement. This filing is from AgEagle Aerial Systems Incorporated. They are registered in Nevada and their main business is related to drones, which is a pretty exciting and evolving industry. You might know them from their stock symbol UAVs. Now, this document is a Form 8K, which is basically a report for significant events that shareholders should know about. Think of it as a company saying, hey, something important just happened and you need to know about it now. It's all being filed with the US Securities and Exchange Commission, or SEC, which is the government body that oversees the stock market. The date that matters here is the 6th of February 2026. This is when the main event we're talking about today took place. The filing itself is a confirmation of an agreement that was adjusted on this date. The core of this report is about a business deal. Specifically, it's an update to a securities purchase agreement. Now, a securities purchase agreement is basically a contract where investors agree to buy stocks or other securities from a company, and the company agrees to sell them. Back on the 5th of November 2025, AgEagle made a deal to sell up to 100,000 shares of something called Series G convertible preferred stock. To break that down in simple terms, preferred stock is a type of stock that has some special features, often including a fixed dividend. Convertible means that the holders of this preferred stock have the option to turn it into a regular common stock, like the kind you probably see traded on the stock market. So they promise to sell these shares to investors who are called purchasers in this document. The price and other details of that original deal were laid out then. Now here is the update on the 6th of February 2026. AgEagle and those same purchasers got together and signed an amendment. An amendment is like a change or a modification to an existing contract. So they didn't scrap the old deal, they just tweaked it. What did they change? They altered when the investors could decide to buy more of these special shares. Previously, they could only do this about once a month, specifically every 31 trading days, which means days the stock market is open. But now, they can choose to buy these additional shares at any time. This gives the investors a lot more flexibility. However, there is a catch when they do decide to buy. They have to buy at least $2 million worth of these shares in a single transaction. This means the company will get potentially larger chunks of funding more frequently, but the investors have a minimum commitment each time they act. This change is pretty significant for AgEagle. It suggests they might need capital more readily or at different times than originally planned. For the investors, it means they have more control over how and when they invest, which can be good if they see opportunities to buy when the stock price is favorable or when their own investment strategy calls for it. The requirement of a $2 million minimum purchase, per instance, suggests these are sophisticated investors who are capable of making larger financial commitments. This is a standard legal phrase meaning that the description they've provided is just a summary, and the actual full document for the amendment is available as an exhibit. This section just lists the exhibits attached to the report. Here, Exhibit 10.1 is the actual amendment to the securities purchase agreement we've been discussing. This is the document that contains all the precise legal language. Exhibit 104 is a bit technical. It's for the interactive data file, which is used for making the financial information more accessible and machine readable. And finally, we have the signatures. This is where the company's authorized representatives sign off, confirming that the information in the report is accurate to the best of their knowledge. Here we see the signature of Alison Burgett, who is the Chief Financial Officer. This confirms that the company's finance head has reviewed and approved this filing. It is her job to make sure the financial aspects and disclosures are correct. Now, let's step back and look at what this all means for AgEagle Aerial Systems Incorporated. This amendment shows a shift in how the company is being financed. Originally, they had a structured way of selling their preferred stock, allowing investors to buy in at set intervals. Now, the investors have significantly more control over the timing of their purchases, with the caveat that each purchase must be substantial. For AgEagle, this could be a sign that they anticipate needing capital more dynamically. Perhaps they have new projects lined up that require flexible funding, or maybe they are responding to market opportunities that could arise suddenly. The flexibility given to the purchasers means they are likely confident in the company's future prospects and see value in being able to invest when they deem fit, as long as the investment is large enough to be meaningful. On the flip side, this flexibility for investors might imply less certainty about when the company will actually receive funds. In the original agreement, the 31 trading day cadence provided a predictable stream of potential capital. Now, it's more of a call when you need its situation for the company, with a high minimum bar for the investor. This could lead to periods where substantial funding isn't immediately available if the investors don't exercise their option. It is important to remember that this filing doesn't provide any new financial statements, so we aren't getting a look at their current revenue, expenses, or profits. The focus here is purely on the financial arrangement, specifically how the company is getting funding from investors. This kind of financing maneuver is common for companies needing capital to grow, especially in rapidly developing sectors like aerospace and drone technology. However, the specific terms of this amendment allowing investors to buy at any time with a large minimum is a noteworthy detail. It suggests a level of trust and perhaps a strategic alignment between AgEagle and its investors. It could also mean the company is willing to grant this flexibility in exchange for continued investment and support. Looking at the broader picture, AgEagle is in a competitive and evolving market. Ensuring a stable and flexible funding source is crucial for research and development, manufacturing, and expanding market reach. This amendment to their purchase agreement is a key piece of that puzzle. It signals that while the core deal remains, the mechanics of how money flows into the company have been adjusted to provide more agility for both parties, though with a clear emphasis on larger purposeful investments from the purchasers. What's my take on this? It is a smart move by AgEagle to adapt their financing terms to potentially better suit future needs or market conditions. The $2 million minimum purchase is a significant amount, indicating these are serious long-term investors. However, it does put the onus on AgEagle to manage their cash flow and be ready to signal their needs clearly to the investors. The weakness here could be the unpredictability if the investors do not choose to exercise their options frequently. Despite the flexibility, the opportunity is obvious, a more responsive funding channel for growth initiatives. Alright, that's our breakdown of AgEagle Aerial Systems Incorporated's latest filing. What's your take on these financing changes and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable to you, hitting that like button really helps us out, and subscribing ensures you won't miss our next deep dive. And remember, you can join the conversation and get more insights on our Discord server, linked in the description. Thanks for watching, and we'll see you next time.